Hey, you guys know how many people around the world are using stablecoins to escape the rat race right now? I'm telling you, it's already 2026, and I really didn't expect this thing to still be exploding like crazy. $33 trillion. That was the total trading volume for all of 2025, up 70% from 2024. The craziest part isn't even that number. The craziest part is that roughly $200 billion of it is held by regular people, everyday people, not institutions, not crypto traders, just ordinary folks keeping it right there in their phone wallets. India, Pakistan, Brazil, Venezuela, Nigeria, Turkey, Argentina. You look at those country names and you instantly know what's going on. You think they are gambling on coins to get rich? No. They are using stablecoins because if they don't, their money is basically evaporating. Argentina, for example, in 2024, inflation hit 117.8%. In 2025, it cooled off a bit to around 31.5% for the whole year. You might think 31.5 sounds manageable, right? But the problem is that that earlier spike already destroyed nearly every ordinary people. The government had this policy called CEPO. Basically, if you wanted to buy dollar to protect yourself, they'd only let you get a tiny amount each month, and then they'd hit you with ton of taxes and fees and stuff like that. So what were normal people supposed to do? They went to the black market. And then USDT rolled in. You know how Argentinians were buying USDT back then? Straight from their phones. Instant delivery, no paperwork, no worries about getting fake money, no taxes, Yes, to them, that was the most convenient dollar they could get. So if you go to Argentina or Colombia today, you'll see that ordinary people make up more than half of all stablecoin to local currency exchanges. This isn't speculation, brothers. They just needed it to survive. Later, the government couldn't hold out anymore. So in March 2024, they finally made virtual asset service providers legal. Everyone thought that was the end of the story. It was great news. But then, in February 2025, you remember what happened with Milei and the token Libra? That thing hit $4.5 billion in market cap in just 1 hour or something like that. Then the insider wallets dumped. And yes, they dumped it in a few hours and crashed it to the floor. Investors lost $2.51 billion. Man, let me tell you, a sitting president personally shilling a coin and then rugging it, I really didn't see that coming back in the time. Now it's a little bit different. But you can look up how much Milei's approval rating dropped after that. And it's pretty ironic. On one side, you've got regular people using stablecoins to save their lives, and on the other, the president running his own little harvest operation. What kind of script is this? Anyway, let's get back to the real question. How exactly are stablecoins changing cross-border remittance? Filipinos and Mexicans working in the US send hundreds of billions of dollars back home every year. The old way? Bank transfers or Western Union, 5 to 7% fees and up to a 2 to 5 day wait. In some countries, it was even worse. Banks just stopped allowing transfers completely. Then, stablecoins showed up. Go look at Goldman Sachs' digital sandwich model. Overseas, you turn local currency into USDT, send it back super cheap and fast on Tron or Solana. Family back home gets the USDT and swaps it straight into local currency. The whole thing completely bypasses SWIFT. It bypasses banks. It bypasses every middleman. Let me run the numbers for you. Sending $1,000 the old way costs $50 to $70 in fees, and you wait 5 days. With stablecoins, it's less than $1 and it arrives in 5 minutes. And it's not just individuals. My friends in Latin America, they tell me more than 70% of small and medium businesses there now pay suppliers with stablecoins. Why? For the same reasons, in fact. It's fast, it's cheap, and it's certain. Order today, settle today. No worrying that tomorrow the currency will crash again. Then think about this. DeFi. Once you turned your money into USDT before, you could only just hold it, right? But now, it's different. In 2026, the yields aren't as insane as they used to be, but for people whose local currency loses value every single day, what is this? It's a dollar-denominated savings account. No KYC, no minimum deposit. You don't need to be anyone special. You just need your phone and a wallet and you get the service. Do you realize what that means for them? The people traditional banks can't or won't serve are now being served by stablecoins and DeFi. Bank deposits are flowing out and the whole foundation is being shaken. But the most important thing here that I want to talk about today is something a lot of you probably haven't thought about. All those Argentinians and Turks using stablecoins to protect their savings, they think they've escaped, right? They've escaped the problem of fiat money in Argentina, in, Colombia and stuff. They escaped their own country's inflation and central bank. But have they considered they've just stepped into another, much bigger system? America's Genius Act went into effect in July 2025. What does it say? Every compliant stablecoin issuer must be able to freeze specific wallet addresses on government orders. At the same time, they must hold one-to-one reserves in dollar or short-term US treasuries. What does it mean? Are you hearing this? The USDT or USDC you are holding is backed by US treasuries. You thought you were using some decentralized money? Not at all. I'm sorry. You're actually working for the US Treasury Department now. You thought you escaped the system, but you just traded it for a bigger, more hidden one. The IMF is warning. The FSB is warning. Stablecoins are slowly making the monetary sovereignty of weaker countries disappear. When ordinary people in a country are all using dollar stablecoins, what power does that country's central bank have left to set interest rates or manage the economy? Basically, none. So you ask me, are stablecoins a way to save yourself from the system? Or is it part of a bigger trap? From an individual standpoint, they really have saved a lot of people's lives. I agree to that. You turn your money into USDT, you keep it in your phone, and tomorrow when you wake up it's still worth the same. You send money home with fees dozens of times cheaper, so that's great. You put your savings into DeFi and at least you can beat inflation. Who wouldn't love that? This is the most rational choice an ordinary person can make. But from a national point of view, if we talk geopolitics, when your wallet can be frozen by Washington anytime, when your savings are actually helping support America's debt, you've just moved from a small cage into a much bigger one. So what does the future look like when you know all that? Some countries are trying to regulate it, like Turkey and Argentina, wanting to legalize the market while keeping some control. Other countries are launching their own stablecoins, like Nigeria's CNGN. They are trying to use blockchain speed to rebuild trust in their local currency. But in the end, it all comes down to who can win the trust of ordinary people. Ordinary people have never cared about the big macro stories. They don't care. They don't have time for geopolitics. They only care about one thing. Where can I put my money so that when I wake up tomorrow, it hasn't lost half its value? This is a story of stablecoins in emerging markets, a story about survival, about trust, and some really tough choices. But do they really have a choice?